Good afternoon, Alex Cole, and thank you to all of the Stock Charts viewers that are checking this out. My name is Tyler Wood, and we are here to talk about GoNoGo Charts, a brand new plugin available on Stock Charts ACP. Let's get at it. All right, we've all gone through this process, right? We've all seen a chart just like this, and it's a problem because it causes analysis paralysis. We have indicator overload. We can't even see price on this chart. And after all, price is the most important indicator of all. In fact, when I first started at the CMT Association over a decade ago, Ralph Acampora came in and he told a story about walking around the trading floor at a new investment firm, and he was the new chief strategist. And he walked past a kid's desk who had like 6 vertical monitors, each one with a chart with 100 different panels underneath and lines going everywhere. And Ralph leaned over and he said, "Son, that's amazing. I have never seen technical analysis like that. What are you looking for?" And the kid said, "Sir, don't tell anybody, but I have no idea. But my boss thinks I'm a genius, so I'm just going to keep all these lines going on this chart, right? The more, the merrier."
Yeah.
That's a problem, right?
Yeah.
We know that investing is simple but not easy. And when you get that kind of indicator overload, you're bound to lose sight of a really controlled, rules-based investment discipline.
Yeah. And those examples are everywhere in our careers in technical analysis. I remember working with a specific sell-side research analyst, and we built charts together, and she had a great process, and it was really technical. And she would add this and this and that and the other thing, and then we'd get to this point in the chart, and she'd say, "Okay, that's where I would recommend a buy." And she said, "The problem I'm having is that when I show my buy-side clients that, they just can't follow along. It's just way too complicated. I've gone through all these different things, and they're really having to take my word for it just at the end of the day, because the chart that I'm showing them is just way too complicated for them to understand." So from all different perspectives, an overwhelming, complicated chart is a problem.
That's not what we want from our technical analysis and not what we want from our charts. So we're going to talk about solutions. Now, ink has been spilled by a lot of folks smarter than Alex and I about the persistent anomaly of momentum, about trend following investment strategies. And even if we go back over 100 years, Charles H. Dow was telling us about prices that trend and the mood of the market, how investors heard. So let's talk about how important it is to just identify trends in securities, Alex.
Yeah, trend identification is arguably the most important skill that we can work towards as technical analysts. And there are so many different ways we can get there, identifying higher highs and higher lows, looking for price relative to moving averages, all these different concepts, all these different indicators that we can use. But like we said, that overcomplicates our charts and leads us to question our own analysis. So what we have with the GoNoGo trend is a tool that blends objective statistical measurements along with the founding concepts of technical analysis to color the price bar according to the strength of its trend. And when you do that, you are left with price remaining the focus of your chart. So you can do supply and demand analysis. You can look for key levels. You can look at patterns. You can look at trend lines. That chart before, you can't even see price. So when we take the GoNoGo trend, we have all that information that we've built up over the years of decades working with people, all those important concepts and tools taken from technical analysis, but blended into a chart that remains easy to read and easy to see price.
And what's important to recognize is that there's more information calculated into this color-coded bar chart than there was on that first chart. What's also reassuring, I think, to all of the users on stock charts is that whether you're a traditional equities only investor or you dabble in some commodities and futures trading, or maybe you're even exploring new emerging asset classes like the cryptocurrency markets, GoNoGo charts are going to work on any security across any asset class over any time frame. We're not here to tell you what your objective should be, what your time horizon might be. We've got clients who use these on 1 minute E-mini futures charts, and we've got long only PMs that are looking at monthlies. The tools work the exact same way across any time frame. Yeah. Alex, let's dive into GoNoGo Oscillator.
Yeah. So when creating a complete chart that gave an overview of the technical environment for any asset, like you said, the next place a technician will go after trying to identify trend is probably to get a sense of momentum. And so, but again, the same problem persisted everywhere I worked, where you've got panel after panel after panel trying to give you valuable information about momentum, but shrinking your price panel and making everything harder to understand. And so along the same lines, the same concept, The GoNoGo oscillator on this lower panel is one oscillator that blends together the robust, tried and true, tested momentum indicators that are on everybody's chart, but into one oscillator that gives us a sense of momentum when looking at any security. And it's important to note that that gives you the traditional value that you get from any good oscillator. We can identify extremes of overbought and oversold levels. In our oscillator, it goes from +6 to -6, with those extremes being overbought and oversold. We can also identify divergence easily. You can see here on the chart, we've got a higher high in price and a lower high in the oscillator. And when momentum doesn't confirm what you're seeing in the price action, that's a warning sign. Not necessarily that the trend is over, but that a correction may be coming. So you can still use this in a traditional sense, but we'll show you that there's a little bit more to it. Also, volume, very, very important from the time of Charles Dow all the way back, using volume as a confirmatory indicator, very important. So I wanted to build that into the chart as well. And volume is incorporated in the way that the oscillator changes color. So when it goes from that pale aqua to a darker blue, that dark blue tells me that volume was heavier than it was relative to its recent volume history. And then when you get a break in price, a breakout, and the oscillator is in dark blue showing heavy volume, you can use that as you would any other volume information.
Fantastic. Now, Alex, I know you have gone through the research, the first author work around using momentum indicators within trend, specifically Connie Brown's work and others. Let's talk a little bit about the zero line that you developed for an objective level of neutrality.
I love this part of the chart. I hope that it's uniquely valuable to people, but it comes out of that research. Then we've all learned at first that momentum indicators are helpful in sideways range-bound markets to identify mean reversion opportunities where prices move too fast in one direction. But there's more value in these oscillators than that. In trend, you can use momentum to get a sense of how to stay in trend. And the research that you were referring to talked about how there are ranges for these oscillators. RSI, for example, a lot of work and a lot of people use it to say when you're in a bull trend or an uptrend, RSI will go overbought. That makes sense. Excessive buying, enthusiasm, time and time again in an uptrend, but it shouldn't go oversold if the trend is strong. That doesn't make sense. Excessive selling when in an uptrend, that's a concern. So it should go overbought and then come back into neutral territory. Overbought, back into neutral territory. Now, the problem with this is every oscillator out there is very, very choppy and moves very, very quickly. So to identify a level of support that can be used when a security is in trend becomes very difficult. It becomes subjective. Is it 43 on one security? Is it 38 on another security? If price comes down to 41, does that count as touching support if we're using 40 as the value? So we calculated the GoNoGo oscillator in a way that causes the indicator to fall to zero if in a go trend or rise to zero if in a no-go trend to provide an objective level of support and resistance when in trend. So when all the inputs to this blended oscillator are in neutral territory, our oscillator will hit the zero line. And that allows us then to stay in the trend because we can say if the oscillator hits zero and stays, finds support and bounces, that momentum has come back in the direction of the trend that's in place. And that's super powerful.
Now, to bring this into application, for any of you who have paid your tuition to Mr. Market and taken some heavy losses, you know that the best tools out there work maybe 60 to 65% of the time. We know that we're going to have some trades that don't work out. So a disciplined investor is going to work to cut those losses short, but let their winners run. You know that if your winners are outsized 3, 4, 5 times the size of your losses, at the end of the day, over time, you're going to be profitable. Yeah. So the key here is being able to identify a trend and then stay with it, not living this lifetime of regret, cashing out halfway through an up move. So seeing that oscillator hit the zero line and then reconfirm a resurgence of momentum in the direction of the trend is going to give you that conviction to get into a trade that you've been missing out on, or perhaps even size up a position. Alex, why don't you talk to us a little bit about how you can simplify that even further with some great little visual cues?
Yeah, I've been doing over my entire career research on data visualization, and I believe that technicians are the data visualization experts of the financial markets. But we can do more than just look at charts. We can work with those. We can interact with those charts a little bit more. And so, knowing the value of that zero line, I wanted to put icons on the chart that would, help us even further. So instead of having to refer to the panel, let's just put it on the price chart so we can get a sense of what's happening. So these trend continuation icons are the circles. When in a go trend, these are the green circles that you see. And in this case, we're saying the go trend is in place. The oscillator has fallen to the zero line, as it will throughout a trend as price cools off, but it's been supported by zero and momentum has come back in the direction of the trend. And every time that happens, we'll show you with a trend continuation circle. If it was in a no-go move, which is the opposite, they would be red circles. And then the second icon that we're going to show here are the counter trend correction icons. And again, this is not to say that this is the only way to use momentum. I'm a big user of momentum myself, and using momentum in its traditional sense, looking for areas of overbought and oversold, can be very, very useful. So we wanted to put that on the chart as well. And when our oscillator goes to an extreme of overbought or oversold and then comes back into the neutral territory, we will show you those as short-term counter trend correction arrows. You'll see them also on the bottom in a no-go trend as well.
Fantastic. We've talked about go-no-go trend, go-no-go oscillator, the go-no-go icons. Let's wrap it up with the fourth indicator in go-no-go charts, the idea of volatility squeezes. I know there are tons of literature that's been written about this. Alex, tell us a little bit about the go-no-go squeeze. Absolutely.
So volatility was a piece that I also wanted to include. And I've worked with so many people that are always looking for these Keltner band squeezes, Bollinger band squeezes, that idea of a coiled spring, that shrinking of volatility that leads to a significant breakout in a certain direction. So I wanted to find a way to visualize that as well in the chart. And what we've noticed is that whenever that period of price action that's consolidating sideways or moving with very much more reduced volatility, the go-no-go oscillator will ride the zero line, meaning that it'll stay at the zero line for a significant period of time. And the longer it stays at the zero line, the go-no-go squeeze grid will climb. And it'll climb to its extremes and stay there until the oscillator breaks out of the squeeze in whichever direction that it does. And that's just a way to visualize this reduced volatility that can lead to significant breakouts.
We know that technical analysis is really all about understanding supply and demand relationships within the markets for any given security or an index, and you name it. And so visualizing this battle between buyers and sellers where no one has a distinct control. Imagine that breakthrough of buyers as we're looking at this chart on Apple, the breakthrough of buyers through that period of stagnation, and we're off to the races. That's what that go-no-go squeeze is going to highlight for you as a visual investor. Now, we've talked about 4 tools all together in GoNoGo Charts. Those are available through Stock Charts ACP. They're here to eliminate the analysis paralysis that many of us face, the confusion, the contradiction, and oftentimes just redundant usage of extra indicators. We're going to keep your focus on price, because after all, it's only price that pays, and without losing sight of that complete technical picture. Alex, let's bring this all together, synthesize all these tools, and let's look at a simple example and show how you could use GoNoGo Charts with your own portfolio.
Yeah, I've come to terms with the fact that for me, there's only 3 things that I need to consider to be able to talk to anybody, hopefully in any asset class, about any security. And that was very, very important to me as a technician, to be able to give a complete technical overview of a security, no matter who I was talking to. And that is the beauty of technical analysis. And so we've landed on this. If you know what the trend is, what the color of the trend is, if you know what the value of the oscillator is, and if you know if there's anything interesting happening around the zero line, then you can give a technical overview of the environment for any security to whoever you're working with, whether you're a sell-side research analyst talking to the buy side, whether you're a self-directed retail investor, whatever it is, you can get a sense of the complete technical picture just by asking yourself these 3 things.
Well, let's do an example together. If we're just looking at U.S. equity markets, this is the SPY and ETF of the S&P 500 index. Yeah. Let's do it together, Alex. 1, 2, 3.
So here's how easy it is. What's the trend? Well, we can see by looking at this that the trend is a go, but it's the weaker aqua color, meaning that it's corrected a little bit. It's come off its high. Second question, where's the oscillator? Well, the oscillator value is at 0. And what do we need to consider of importance when the oscillator is at zero. We need to understand whether or not it will become support. If this go trend is healthy for the S&P 500 ETF, then the oscillator should bounce off the zero line and find support. If it does, we'll expect price to make an attack on prior highs. If it doesn't, which it would be a concern because it's done this time and time again throughout this move, then that would lead to further consideration about the possibility perhaps of a steeper correction.
Fantastic, Alex. Thank you all so much for joining us this afternoon, watching this video on GoNoGo Charts, which are now available through Stock Charts ACP. We're looking forward to spending time with the entire Stock Charts community, and thank you so much for spending time with us today. We'll see you again soon.